Hello everyone, this is John from the Art of Finance. Welcome back to our channel. We are with you on 22nd of February afternoon analysis. On this video, we will cover some news first, then we will go ahead with our chart. As you have tracked on the news, we are just watching the escalation of Russia and Ukraine recently. Everybody just focused on that side, but what's happening behind those other things, except from these Russia and Ukraine stuff? We haven't heard anything about from China. We haven't heard not serious thing about Middle East countries. These countries are just allies of Russia in mutual benefits because the regime of China and Russia is similar. They both believe in that socialism and against capitalism or that kind of things. And also the other thing in Middle East mutual thing is the oil prices. They just enjoy the high oil prices and then they are just making lots of money. That's the thing happening right now. Another thing is China is waiting for is that real sanction over gas and other things because just imagine right now Russia is selling a lot of gas and oil to Europe at the same time to China. So if China doesn't buy that gas and oil, Russia can sell it to Europe. But how about if it cannot sell to Europe? How about if only China buys that one? So Russia has to lower the prices because China will have other solutions and other things. They have a long-term contracts, but Russia won't have those clients. That's why China is just benefiting from these in long term. This is also a scenario. At the same time, China is waiting for to see the possible outcomes. The same problem: Russia, Ukraine, China, Taiwan. If they just believe that nothing serious happens, annexation or attacking to your neighbor country, if they just believe that, all right, it's not as bad as expected, then they may think about the same thing for Taiwan. That's also another scenario. All right. So the prices are really changing. The only thing just right now not moving that fast is the natural gas prices. I'm expecting something to happen to gas prices in coming days, so that's really important. So that's why we will just talk about on this video on the chart of natural gas. All right, that was the news, and let's end another thing. Evergrande. Everybody just forget about Evergrande issue, but in March, in the middle of March, Evergrande is expected to pay one major bond that is 1 billion US dollar. It's the beginning. In total, this year they have to pay major bonds of more than 6 billion US dollar. These international bonds and all domestic, including that one, more than 50 billion dollar they need to pay. We will just see critical times on that one. While everybody is focused on that one, please don't forget that. All right, let's go ahead with our first chart. The first chart is euro dollar. As you can see here, euro dollar is just trading flat. Dollar index just making some momentum, rising because of this escalation and taking some attraction from investor, but then suddenly drops. At the same time, euro is one of the most affected to be affected country of this escalation, high energy price, other things. Euro is also on the valuation. Reason is if the gas prices and energy prices goes high like this, that interest rate hike and support an economy should be short-lived as the inflation will go higher. ECB can make something and that may keep the value of euro high. Those are the expectations. That's why, as you can see here, it's just trading flat. Sometimes it's declining. Dollar is just getting momentum, but then dollar index is just failing, and then euro is going up. So as long as it just goes there like this, we will just see this one. But if the market definitely believes that 0.50 base interest rate in March and more is on the way, then we may see decline. If the market believes that ECB will just take step and raise the rates more sooner than expected, then it will go up. In coming days, you can just watch the news and the expectations. We can just talk more on that. Let's look at our second chart.
You are ready to win with us. GAN Markets.
Alright, we are checking the price of wheat. So, oil prices is rising, gold price rising, but why wheat prices are also rising? Because of the sanctions. Possible sanctions will just limit the trade of wheat in global markets, and then we will see a higher level of wheat in market. Because Russia is one of the biggest grain producers in the world. The second one, another one is Kazakhstan. So just remember, just a few weeks ago, there has been some protest in Kazakhstan, and Russia sent troops and helped them in some way, and the government leader has changed. Then someone who speaks only Russian right now in the charge and the leader of Kazakhstan. So we may say that grain market of the world is on the hands of Russia. What they say, it will happen. So on a sanction, on an embargo of the trade to Russia will affect the price of wheat as well. We will just watch these prices going up. You can think wheat prices similar to gold and silver and oil and gas prices. As long as they go up, we will see these prices go up. Another reason is the cost to produce wheat. 1 ton of wheat, let's say 1 ton, like a 100 liter of gas is needed, diesel is needed. So if the cost of that 100 liter of diesel goes higher, then 1 ton of wheat goes higher as well. That's why we just see higher prices in wheat prices, and these affect, I'm always saying that, higher wheat prices creates social and civil unrest. Remember, Arab Spring has started as one guy couldn't afford bread to his children and burned himself on the streets of Tunisia, and then it started. At that time, the price of wheat was more than $1,000. These kind of like a really in poverty majority countries and really poor countries, if they cannot afford the basic food, basic bread, then civil unrest starts. So you will just watch that one carefully, because it's more than economy. It's the matter of life and death. Let's look at our last chart. Alright, our last chart is natural gas. As you can see here, natural gas prices are just stable. Everybody should have expected to go up last night to these levels, as Russia has just imposed a recognition of these two rebel regions. After that news, everybody expected that one, but it didn't happen because people still think that gas situation is different than political issue, because Russia has long-term obligations and Europe has long-term contracts, so it won't be affected, but it will be affected. This is just a temporary situation in my opinion, because when European countries want to diversify their investing, their sources of natural gas, they will just demand more LNG, and in the LNG from US will just increase the price of natural gas. But if they just increase the price more, then it will just lose its affordability than the pipe gas. So I'm not expecting like a $10-20 off that one, but still at least 50 cents more than this price. Something like a $5 is on the short term is kind of possible in natural gas. I'm not saying at this point buy, just wait for the confirmation of the move, because before doing that price thing, we may just see first relaxation on price, because it cannot go higher, and easing price then go up is also a possible scenario. So just wait for that move, go higher or for lower first, then you can make your move. But if the things go like this, we will just see higher price of natural gas. One more important thing is Nord Stream 2 pipeline from Russia to Germany, direct way to Russia to Germany, now has been halted. Olaf Scholz says under these circumstances we cannot approve of this project, so it will be on hold as long as we see progress. So all these things are just on hold. Alright, thank you so much for watching us. We will be together on mornings tomorrow morning. We will cover more analysis with you. Have a nice and profitable day. Bye.